100 years of economic data. What can that tell us about the current stock market correction and whether it's over? Well, as it turns out, only 17 times before have we ever seen such an event, and today we cover the stats together. Also, will the Fed cut rates below 3%? Everybody's talking about how the Fed have put the pause button on the markets, but more importantly, that's led us into this critical area. Whether it's the S&P 500, the semiconductor market, the Qs and the Nasdaq, or rates, they're all at critical points, and this is where Wall Street tends to set the trap. So join us today as we cover stocks, commodities, and cryptos together. Well, welcome back everybody to the Daily Show, where we discuss the macro lead indicators and hottest charts. If it's your first time here, consider subscribing and smash that like button as well and the alerts, because we do cover this every single day. It was actually a day that looked green on the surface, but wasn't as good as you think. 75% of the stocks in the market were actually down for the session, and that leads us into some discussions we need to talk about today. What happens when the Federal Reserve's done hiking? And more importantly, did we just see one of the rarest signals in the market for the bulls? Well, let's talk about the RSP, the equal weighted market. You'll notice here that not only are we on the downward trend line, therefore resistance and supply, but also this critical level over here on the left-hand side hasn't really been properly cleared. This is a big deal and, of course, can lead into some problems moving forward if we're not able to clear that level for the bulls. So what happens with the Federal Reserve? Have they actually finished hiking in this cycle? A lot of you are arguing they haven't, and of course we'll talk about the first time frame change of trend and one of the key things that we've just started to see in markets. But more importantly, let's have a look at whether the stats line up with similar other times. 1 month after their finished rate hike, 3 months after. If we have already hit that level, remember we have stats right now leading through from July. 4.2% negative month. Well, that's consistent with basically a coin flip. We also see 3 months later, which we now have the stats, -7, again, consistent with that kind of coin flip scenario. Where things get a little bit more interesting is when we go to 12 months. If it is the final cycle, 12 months later, 80% of the time, the markets are actually bullish after the Fed has completed the rate hike cycle. So this is what it looks like on a chart. We shared this over on our Twitter/X account, links in the description down below. And you'll notice here that we have the 6th of November, the 3rd of November, and of course, October here. And what you might be surprised at is when you take a look at the October line and you see the differences between the November start line and where we are right now. While markets have started to cool on the idea that we're going to get as many rate cuts, there's still a very low terminal rate sitting at around 4% in expectation compared to about 4 to 4.5%, 4.25 to 4.5%. And we also get more rate cuts starting potentially in the middle of next year. Now, I think it could be that it's as early as Q1 if things are really broken. So this is an interesting point and, of course, an inflection area for us as traders and investors. We need to keep an open mind both cases. So we talked about the idea that we had a really rare signal. So what about the Zweig breadth thrust triggers? Have we seen those before? The truth is, yes, we have. Many, many times. You can see here some of the history of similar thrusts. And we just got one over here. Now, there are a few different ways of reading this. So unfortunately, we have two different types of stats, which we'll look at today. But the percentage positive over a 12-month return and a 6-month return are incredibly favorable for the bulls. Here are some of the reads taken, and you can see that we've got all the way back from 1945. And even before that, some of the stats that we've seen really show us a mostly positive type of relation. 12 months later, the stats are very good, over 20%. That's better than a normal year in markets. And actually 1 month after these reads, 3 months after these reads, and 6 months after these reads, the stats are really favorable. Going into this time of seasonality is a big deal. Here's another one with a little bit less in terms of the data points from 57 to now. And again, you can see the stats are incredibly favorable in the bulls' favor. So 92% almost the whole way through, and then 100% over those longer periods of time. So are we in something like this? Well, there are many different reads we've seen. Here's another one that's quite common or been talked about at this stage, which is the 5-day thrust technique. And this is where I think the pitfall could be for a few investors and traders. Notice that sometimes you'll get the read and then markets will actually drop off afterwards. And people will say, well, that's a failure. I think that we need to remember that 12 months later, was the market higher? The answer is quite simply yes. So in these scenarios, sometimes the reads for this particular one, which is different to the Zweig thrust, are, let's say sub optimal in terms of what ends up happening after we get these reads. Generally, we will have a little bit of an uptick though straight after it, and there have been some perfect ones since 2020 and obviously that 2018 recovery. Strong recoveries off the bottom. First time we've seen this in quite some period, and something we will be following and paying attention to. Here's a great chart showing you the types of recessions that we've seen from 1929 all the way to 2021. Notice year 3, which is where we are right now, we never see a recession being called. Well, that seems to be true again. And if we're going to get one, it tends to usually be in the election year or, of course, year 1 of a new election cycle. So, yeah, the stats are obviously in the favor that we won't get one this year, and we kind of already knew that. So where are the best performances? Let's just say we are a bull in the markets. What are we expecting to do better, and what are we expecting to do poorly? I would say that Russell 2000, one of the worst sectors, one of the worst areas of the market, might be the favorable kind of pair. But again, it's going to be all about risk management. Notice when we get similar reads to this, the Russell sometimes actually drops more before it comes off. Here are some of the periods of time that we've seen those kind of things occur. Slight drops, rally back up. Here we are. We have a very oversold Russell 2000, but the stats point towards a 3, 6, and 12-month favorability based on what we've seen so far with a big pickup in the Russell. Now, it was weak over the last 24 hours, and we'll talk about that soon. What are members around the world saying? What is the retail herd saying? Well, we already know they went bearish, and we can absolutely back those stats up, and it comes back to put premium. Have a look at the put buying premium. Small trader put buying. This is not what you want to see if you are a bear. Everybody started to get negative last week and they've been squeezed out. Obviously, they're going to lose their premium. And unfortunately, retail get trapped again. Hopefully, you weren't one of those because you were watching this channel. We were talking about that big Wall Street level, and we managed to evade many of the pitfalls that others out there did. Make sure to subscribe for that type of stuff. So small trader put buying, we saw a 0.3 read. That's obviously favorable. You can kind of see similar times where we've seen huge puts like this and the types of market conditions that we end up being in. And you'll notice that when premium goes like this, we often do see that bullish case scenario. Here's another one where we get almost close and ends up being a bottoming for that market condition. Let's also take a look at small trader put/call premium, which is another way of looking at it. And this is puts versus calls. And again, you get a bit more reads here. Similar times often being lows of markets. Yes, my lines aren't exact, but you get the point that it often lines up. Now, we just saw a 0.75 read. And again, that's happening at a potential correction zone. So, or it was a correction zone. It was Wall Street's potential reload zone. And then I think that's a very important factor. Now, this doesn't stop bears necessarily on the smaller timeframes and the shorter term. We talked about 1 week later after getting a correction period, positive. Did it happen? Absolutely. 2 weeks later, negative. That's the week we're in right now. 3 weeks later, negative. 1 month later, negative. The month of November in pre-election years does tend to be bullish. But remember, it goes something like this: up, down, and then rallies at the end of the month. Let's have a look if that's what we end up getting. Here are some of the stats for similar kind of big 5% weeks. Everyone's talking about breadth. Everyone's talking about thrust. But what about doing a study on when we see a 5% days or 5% week, but no 2% day? Well, as it turns out, we've actually had a few of these reads, and Wayne's put this together, and he notices that while it is a positive correlation, it doesn't tend to be as good as everybody thinks. It's actually a 10-to-6 bullish correlation. And you can kind of see here it's not the best or not the greatest return results that you would think of. Here's what usually happens in November. And again, it is kind of happening right now. We've seen strength. I'd like to say that we see weakness, maybe a little bit this week. And then we start to go sideways into a nice rally for the end of the month. And if that happens, then we have to kind of believe that December is going to be bullish as well on these markets, regardless of our opinions. If the price action is there, which of course will be therefore going with the stats, well, that would be, a positive sign. We're still in earnings week, so do remember we've got plenty of earnings coming up, although the biggest ones are over now. Most people are talking about Disney this week, which is going to be a very interesting chart because, of course, it's so low. If they even beat any expectations, you'd have to think that Disney's going to get a nice bounce. But as we often say, it's going to come down to patience, react, don't predict. Most of this earnings season has actually had better trades after the result than going into the result and doing the gambling. Here's some stuff with gold. I'm just going to keep mentioning it because, of course, I'm a big believer in this squeeze concept, and I like where gold is. I mean, obviously, it's $2,000 plus an ounce or around there at the moment, and I'm kind of a favor of gold moving to a new high. Yes, if we get rate cuts and everybody's getting that expectation, it's going to be a big deal. Now, we talked about dark pool transactions. We talked about the fact that Wall Street might be setting the trap at this zone. And this could be short-lived because they're going into some leverage contracts. Here's ProShares short S&P 500 though. Couple of large trades coming through in the last couple of sessions. Not super large, but certainly some big ones showing that someone might be angling for a little bit of a movement down before maybe a movement up. Similar thing happening in a couple of other markets, which we'll look at in a second. We also saw junk getting some large transactions into it. Now, because junk's getting some large transactions into it, it could mean that we're getting a base here for bonds. If the expectation is that the Federal Reserve will rate cut and they've hit the highs, again, that's a big if, but if it has happened, then it could really show you why treasuries and also we've seen junk bonds getting some large transactions in it. Maybe a few people are seeing things that we as retail traders don't see or maybe are just speculating on. So maybe they've got more information and they're getting into it. Here's another one, which is, of course, Direxon Daily S&P 500 Bull 3X shares. Now, this could be a profit target or something getting out, or even possibly they're reversing it. You can see here at the big supply, which we'll look at later on today's video, and the big resistance, two major transactions going on right at these highs. It can show you that as a shorter term time frame trader, you might be saying, well, maybe I need to be considering the fact that they are taking some profit here or at least reversing the positions a little bit. All right, let's move over to options now. And I think the most notable thing was, of course, we saw another day of call buying. This marks around 2 to 3 days of call buying, 52% calls, 48% puts. And it really brings us to perspective of maybe we're starting to see a little bit of a trap getting set. As the calls start to ride back in, we know puts were ridden on last week. Now it's maybe calls. Wouldn't this be a great time for Wall Street to push down the market, then rally it later on? Well, I certainly think it could be a scenario. We discussed this in our Monday open show, so something interesting there. Moderna dropped another 7%. This stock is probably a great one for you to look at along with Enphase, as why sometimes buy the dip strategies are not necessarily the best. Instead, we should be buying the V, buying the recovery, not necessarily buying the dip. The dip can get you in a lot of trouble, and I'm sure many of us out there, put your hands up in the comments down below if that's happened to you. I'm going to say it's happened to me. I've bought stocks based on my opinion. I've bought the dip, and they kept dipping and dipping and dipping, and it was quite unfortunate. Now, of course, once you learn not to do that as much and you buy the V and you give away a few percentage points down the bottom to get that recovery, you do tend to have a better kind of level. And of course, we talk about this a lot in our day trading masterclass and swing-based strategies. Links in the description if you're interested. iShares 20-year treasury bonds. Now, this is something TLT didn't have much trade on it, but we're still getting a little bit of calls. Obviously, it went down because of that. Too many calls coming back into these markets. But lots and lots and lots of hyper growth stocks coming through. We saw Zoom again, 1.44 times. And then we had things like Enphase coming back in. Enphase has got an interesting island reversal possibility. That stock has been absolutely brutalized throughout the last couple of months, maybe 6 months of just consistent selling. Have we found the low? We'll find out. Defensives seem to be in focus for the session. We had healthcare doing number one. Okay, interesting. Then we had tech, then we had semis. Okay, they held up. Staples out of nowhere, and utilities also in the top. Clean energy, solar, regional banks, all of these types of ones were down a little bit more on the session, showing us that the market's like having a bit of a cool off. And as we mentioned before, it was like 75% of stocks were actually down on the session. Let's have a look at the 5-day average. Of course, the types of recoveries that we wanted to see are still there. Home builders, regional banks, semiconductors. All right, let's move over now to the percentage of stocks above the 20-day moving average. And that was a really strong break last week. And of course, consistent with things that we want to see in general. If we take a look back maybe at a weekly here and really put this into perspective, when we tend to see these huge thrusts in markets, such as this one here in March of 2023, we bottomed off. Here's another one from December. We know what happened. Here's another one from September, which obviously led into the October lows. We got that big thrust. So in general, these are the types of things you are seeing and you want to see. And that happened whether you're looking at the percentage of stocks above the 20, the 50, or of course 200. All of these did start to improve, which is a fairly big deal. The skew also started to stabilize a little bit, which is fine. Skew crush obviously was something we looked at back in June into August, and kind of we thought, there was a sell coming, and it was, but at this stage, stabilization is fine on that market. What about the old sneaky Federal Reserve and central banks around the world? They continue to inject a little bit back into the markets, again, stabilizing force through this recovery. But we'll talk more about the resistance soon because that's still a problem. US 2-year, back to a point where you'd like to see maybe a little bit of weakness back into the Treasury yields. And this is going to be a big deal. US 20, US 10, US 30, all of these types of ones are showing signs of first switches. So really what's happening here is we're breaking through some of the demand, we're breaking through some of the support, and we're showing that maybe we've put highs in. Now you might be arguing, well, that's not proven yet. And I would say absolutely you're correct. Periods like this one over here, March, didn't end up stopping. And, that's probably the major other one that was, I would guess you would say, a trap in terms of people thinking that it was all over. However, even though it was a trap maybe on yields, what ended up happening with markets around this time, you might have said, okay, this shows us that the yields tops are in. Well, markets actually ended up going higher. So that's that's the thing about it. You could say, oh, well, it trapped me in yields. Yeah, if you're buying treasuries, but if you're buying the market, actually it was pretty okay. Let's move over here to US 2 versus 10. We've talked about this being a recession bringer, and it hasn't happened yet. Of course, we're looking for it to go under 1%. We'll alert you when that does occur. Let's move over to Dow Jones Transportation Average. This was another decent session. Actually held up, only down 0.07%. Really strong weekly candle on this one. Big engulf. Obviously, we've got alerts set above 15,269 to show us that we're really out of trouble, out of dodge, I guess, at that point. But it looks pretty good. And home bills actually managed to put in a little bit of a high here. So again, I think a positive sign that pullback should be met by bull demand. Look at the volume as well. The volume coming through home builders was strong. Same in ITB, which is construction. Copper, another one that I like to see. Big close on this. Didn't quite really smash out this high, but it still did it. Broke the downward trend line. We've been talking about copper showing us recovery for a little while. And another one that we want to be checking out as well is going to be iron ore. So I'm a big fan of iron ore. I'm from Australia. We have red dirt, if anyone doesn't know, in Australia. And we do tend to talk about it a little bit more than maybe some other countries do. But this can also be a bit of an economic health indicator. Does that show you a market that is weakening off in terms of demand? I would say the answer is no at this stage because, of course, we keep making a series of kind of, you would say, like higher highs off the bottom. This was a big switch inflection point, which happened back over in this period. And you can notice that's October to the February run. Then we dropped, but we end up finding base. If we make a new high, which we'll set an alert for right now, then that will be a big deal for markets. It will show us there is still some demand. This is the latent demand that obviously came through 2020, and then that big crunch that happened just before, funnily enough, the crash of 2022. Let's move over here to RSP. Equal weighted market, strong, but still problems. So really big issue in here. Obviously, we kind of expect weakness into potential strength at this stage. At least that's what the markets are telling us at this stage. If you're a bear, though, you like these zones. Why wouldn't you? So let's now move over to the US dollar. Now, there are some positive signs for dollar traders at this level. We spoke about it in our weekend analysis that we do in the private community. And we also spoke about it a little bit on the Monday Open. I talked about this zone being a bullish area for the dollar, even though the dollar is starting to look negative. And it certainly looks like that was the way that it was placed here in markets. You can see here it's kind of finding this level. Now, this is a serious level of demand. So a lot of people are going to say, oh, well, look, we're through this. We're going to see selling. It's all selling, selling, selling. I would say that there's more than likely a buyer that's going to come in here and push it back to 106. So that would be consistent. We see strong dollar, maybe see weakness in markets, and then we have to make a decision whether the markets are really going to rally through. Nice little pickup, though, by the dollar here, and I could see it pulling back, maybe finding strength. So just in the short term, that's something that we'll be looking at. Then, of course, we'll upgrade later on this. That's going to be maybe a bad factor for gold, although I'm bullish on it over the medium long term. Short term can be a little bit different. So this area has been key. I mean, it's 2000 psychological. We know that it just rallied up super high, super quickly. That's going to have to read a lot of indicators. So while I still think this is probably an accumulation for a market move higher later, we're looking for the trap. Remember, patience, react, don't predict. at this stage, there are not too many excellent trades in here. We could move down into the smaller timeframes and argue that there may have been a decent trade to go into right there then, and that still may come through. We haven't seen any rally yet on that, but we also don't want it to go underneath this zone down here. So I would probably be setting alerts at like a 1964, an alert round here, seeing how the market reacts to this zone, and we'll update you as we see possible movements. Gold got a little bit boring last week, there's no doubt. Gold stocks, similar. I still think they're undervalued. Everyone's going to call that an inverse head and shoulders. I don't blame them. It's pretty key. We know where the alert is, and we also see it as undervalued compared to gold spot at this stage. So, I mean, have you ever seen more beautiful inverse head and shoulders? That's pretty nice looking. It's also got massive volume over here on the right-hand side, showing us that some transactions are going on. All right, let's move over to oil. So I've been pretty negative on oil recently. I do see a merit in potential oil longs if we do get above something like 83.60. That hasn't happened yet. We've seen just kind of like lower lows forming at this stage and a pretty equal high, telling us there's supply here. Oil looks kind of horrible on charts. If it breaches through here, it could really fall quite significantly down to 77.60 or even lower. And you can see on the daily that it's not really exactly finding strength. These are all rejection wicks. So remember, if we clear above these rejection wicks, that's going to mean a squeeze is coming. At this stage, markets are negative, and that's the way it's looking on charts. So oil to the downside at this point. Tesla, let's move over to Tesla. Again, weakness here is probably expected. Plenty of intersecting lines, 20 moving average daily, 200, blah, blah, blah. We've got a lot of stuff here for Tesla. I'd like to see it kind of pull back into strength at this stage. A nice little higher high, although they're both red. It's kind of like, a bit annoying there, question mark. But volumes remain relatively consistent, and if it's going to find buyers, you would think that maybe fill the gap 205 into strength could be a good play. Let's move over to AAPL. What's going on there? Well, it's downward trend line this time. However, we did break through 1.46% on the Apple stock here, and another decent session for it. No breakout at this stage. I'm only covering Apple because it's the biggest stock in the world. It's not really my favorite chart at this stage. I think things like Microsoft and Amazon look a lot more interesting. Microsoft just looks like it wants to go for a new all-time high. I mean, that my favorite stock in the market. Why wouldn't I say that? But 356. It's obviously getting positive impacts from AI, etc. So it's a big deal there on some of these stocks. They do look like they want to go for it. Although I'd like pullbacks earlier. US 2000 did weaken, so no 1810 breakout yet, and it was down almost 1%, I think, on the session. So relatively decent sell-off. Still weakening. Still not being able to take this level out first. This is a huge deal for swing traders and bulls of the market. I think that's really one of your final signals that things are really improving. So bears will kind of rejoice that this was rejected and they're looking for further downsides. It's a sign of weakness. The Australian market, just like everything else, look at this trend line, trend line, trend line, trend line. Everywhere there's a trend line. And it's the same sign here on the Australian market. And possibly, the Reserve Bank decision later on today will make a big deal. This is in Australian time. But at this stage, I'm looking for pullback into strength. All right, let's move over to the DAX now. And it's another one. You can see here the downward trend line, and we put that on. It's just across the board. Trend line, trend line, trend line, trend line. Really nice strength coming out of the DAX, although it has had 2 bad sessions now at this level. And of course, the way it breaks is going to be important for more squeezing or a further pullback down to a pretty consistent level. I think the S&P is going to give us the best read. Same thing on things like the Nasdaq. As you can see here, here's the futures, resistance, supply, obviously a critical level, big rally up. It's due for a pullback. Do we have signs of any weakness yet in these markets, though, as we scroll into something like a 2-hour? I would say that around here could be a potential sell zone for markets based on the technicals. I'd like to see a little bit more trapping occur first. But around here, I'm sure some people have shorted the markets. I could see it do like that first, though. So be a little bit careful. A rally into maybe a sell during Jerome Powell's speech could be the thing that's in the cards. Gap fill, 44.01, I think it is. Yeah, 44.01 for the S&P. This is my favorite case here. A bull move from the S&P into weakness into strength. Now, it would make sense because we get like a bit of a bull move on Tuesday, get a new high, trap people into longs, all fantastic. Everyone's feeling great. And then suddenly, boom, back down. Oh, we broke the trend line. Yeah, did you? That's what it's going to be to think of. So 44.01, the gap fill is in focus. And of course, we have other gap fills below. So let's just go back to the SPX here and mark those in. A lot of people ask me how I mark gap fills. Well, of course, we've got one here at 43.18, but I think the one we want to focus on are going to be these ones here. So 41.94, not really fully filled. Let's call that equal enough. So this one here is the big one, 42.39. So we could put on 42.39. We'll just get this here and put 42.39 on. And that's going to be a pretty important point because you can see here that it's previously found support, resistance. So again, it's kind of like a role reversal zone, some structure, some levels in there, an interesting area for us to focus on in the future. Let's move over to crypto. Crypto continues to kind of plow higher at this stage. Weekly obviously put in a bull move. It's just slowly melting up. And they do say that you shouldn't short a dull market. And I would say that is dull. The blade is dull. It looks absolutely boring. And it looks like it's just grinding higher. And what that's doing is it's refreshing a lot of indicators that will be overbought that people are trying to sell on. And you've probably seen these types of markets. A lot of the time they will rally actually hotter off this. And they'll have like some kind of trap where they'll dump first. So watch out for that. We'll keep watching Bitcoin and Ethereum and everything. So make sure to subscribe for those types of ones. And Ethereum did clear our key levels. So again, it's looking more bullish than not on the old crypto pages. Let's move over now to what's going on this week. Of course, daylight savings time. If you're not aware of that, we've got cash rate for Australia. Expectation is rate hike. They really should do that, but we'll find out whether they do or not. If they don't, that'll be a pretty big surprise. And then we move through to Fed Chair Powell speaking Wednesday, 9:15 a.m. So make sure that's going to be a relatively volatile event to see Fed Chair Powell speaking. Everyone knows we have to pay attention to his words. 2 p.m. on Thursday as well for Powell and some other stuff, which is the prelim UOM consumer sentiment. This week's still about earnings, but ultimately it's about Powell and what the Fed's doing and whether the markets really want to see rallies that keep pushing, or whether they want to trap some liquidity. I think this is a critical area that we already talked about last week we would reach. We did. Now we need to see whether there are buyers or they're going to be sellers. And I would suggest, or at least the way I think about it at this stage, there might be some sellers sitting around this zone, but we need to see the structural setups, and we just don't have that at this stage as of the time of this recording. All right, well, let's do a quick thing here in terms of what's going on with our competition. So we'll draw it from prize 4 all the way up to prize 1. We've got plenty of people that have entered, so let's do that now. And we're going to pick these random winners. So the winner of the 4th prize is Dan Tillotson. We'll send you a report or the link for this very soon. So thank you very much, Dan, for entering in. Let's do some more. Let's pick another name here. And of course, I've made it so Dan can't win again. Let's move over here to see what's going on. We've got Chris Pernton wins the 2nd prize, which I believe is our day trading masterclass. So congratulations, Chris. Fantastic. Let's pick another name now and reset that one. And this is for one of the sessions with me. So I look forward to meeting you soon. We've got Recap, aka Reg. Luckily, I know your email address, so I'll figure that out. And you're the winner, and I'll see you soon, hopefully, if you want to do that. And then we've got here the winner of the 1st prize, which is Carson Shaw. Congratulations, Carson. I look forward to meeting you soon. And yeah, as always, a big thank you to everyone in the community. Looking forward to meeting the number 1 and the number 2. So obviously the last couple of winners there for those prizes. And I hope everybody enjoys the community and everything we've created here. It's very special. I always appreciate everyone that subscribes, smashes that like button. And this is just a way of saying thank you, giving a little bit of my time back for free, just to make sure that you guys can learn a little bit more about markets. All right, we'll catch you soon. Bye for now.